Yes.
All right. So investment property is IAS 40. That is what investment property, investment property,
Property.
investment. Ghana for as a property. Now, you can make
Collect
freely there.
collect
You
and
can make
associate
freely there.
as a property.
Okay. Area the property, right? So
Yeah,
property,
property.
investment property. So what is investment property? So investment property or property is land or building that is held to the land or building that is held to earn rentals. So it's a property or say land and building. So land or a building, land or building that is held to earn rentals, to earn rentals or for capital appreciation or for capital appreciation or both land or building held to earn rentals or for capital appreciation. I believe, let me ask this again. Do land depreciate or not?
They depreciate.
It depends. If it is freehold land,
If it's freehold land, it
it's
doesn't
not
depreciate.
depreciation. But if
But
it's a
It's on a
lease land, then you
lease
can
land.
depreciate it.
exactly. So see that with the land or building, you can leave it with the land, especially you can leave it for some number of years for it to appreciate because a land which is sold for 200,000 today would be sold in the future at an amount higher than the 200,000, right? Right?
Yes.
An amount so that is the capital appreciation. So to earn rentals or for capital appreciation means you are keeping the land for some number of time so that when in the future you can get a higher price or a higher amount for that same land. So that is it's a land or building or a property which is held to earn rentals or for capital appreciation or for both. You can have a building or land that you are renting and you are also keeping it for capital appreciation. That's what I saying or both. So rather than or both, rather than the use in the entity, rather than rather than for the use, rather than you using it in the business, rather than for use in the entity, rather than for use in the entity, or for sale in the ordinary course of business, or for sale in the ordinary course, of what of business, ordinary course of business. To investment property include the land of building or part of a building or both. You can have a building and then you would rent parts and then the remaining parts would be used by the entity or the organization. So I have a building, first floor, second floor. I can rent the first floor, then the second floor, third floor. I'll be using it for my business, or I can use the first and second floor I can use the first and second floor and then rent the third floor, right? So the investment property is the for rentals or for um, capital appreciation or for both, right? Rather than the use in the ordinary course of your operations. So that is investment towards property. You are investing it, right? So let us look at some examples of investment property. What are some of the examples of investment property? Investment property. Examples of investment properties. We can talk of um,
Land.
land held for capital appreciation, of course. Land held for capital appreciation. For capital appreciation, right? What else? We can talk of what do you have in mind?
Building.
Building what? Land held for undecided future use. Who can explain the point two to me? Who can explain the point two to me?
Okay. So with the point two, I think maybe you have a land and you have no plan for the land, whether you are going to sell it or you are going to build on the land in the nearby future. So you might want to rent it so that you can have some kind of money like rentals on the land for your capital to appreciate.
Thank you. So you have a land. You have not decided what you are going to use the land for. The land is just there. That is capital investment property. So you have not decided whether you are going to rent it or you are going to use it. So the land is just if the land is just there, that is also investment property because as is there indirectly to appreciate it. In the future you can sell it or utilize it. What are you? So that is also investment property. And we can also talk of um, building, building lease out, leased out under an operating lease, under an operating or lease, under an operating or lease. So what is the meaning of the third point? Who can explain the third point for us? Who can explain the third point for us? Building lease out under an operating lease. Who can explain for us? Hey, who can explain it for us? Building lease under operating lease. By the first, what is operating lease? Yes, what is operating lease? Hey, operating lease is a short-term lease, right? Hello.
Hi.
So that's like a short-term lease, right? So that is where it's an arrangement between the lessor and the lessee. You did a commercial law, right?
Yeah, lessor
You know,
and
if I say lessor, you know what lessor is, right?
yes, the owner of the building.
So the lessor is the owner of the building, and who is the lessee?
The one who is coming to acquire the building.
Is the one who is coming to acquire the building, right? So the operating lease is like a rental agreement that allows the lessee, that is the one who is coming to occupy the building or leasing out the asset, to use the asset, right? To use the asset or the building without transferring the ownership, right? Without transferring ownership. So here, um, he's not transferring the ownership. So um, here the building is what leased out. It's just leased out to the lessee, and then the ownership is in the hands of the what of the lessee. Is in the hands of the lessee. So if the ownership is in the hands of the lessee, then means the lessor retains the risks and what, but the risks and the benefits is in the hands of the lessor. The risks and then benefits all lies in the hands of the what lessor. So the lessor, the one hiring it, has the risk and the benefit. If there is any benefits to, so far as you are having the risk, if there is any benefit to, means you are also getting that, right? So that is the operating list. So the building lease out under the operating list is also investment property. It's also investment property, right? Then what else? We can also have vacant buildings. Vacant what buildings? Vacant buildings held to be leased out under what operating lease? Vacant buildings held to be leased out, to be leased out under the what operating lease, under the operating lease, right? Right. And so, and also we can talk of a building held by a parent and leased out to a subsidiary. A building held by a parent and leased out and to leased to what? A subsidiary. A subsidiary, right? So the parent is under, when you get to level 400. So a parent company is like a company that acquires another company. A company that acquires another company. So the parent company is the acquirer, and then the subsidiary is the one that has been acquired, right? The one that has been acquired. So that is the subsidiary. So a building held by a parent and leased out to what? A subsidiary is also an example of investment property. It's also under what? Investment property. So let us look at some examples of the exclusion items that are not classified as investment property. Items that cannot be, so examples of some of them that cannot be classified as what? Investment property. So let me say IAS 40 excludes the following examples. Excludes example, we can have property held for use in the production of goods and services. So property held for use in the production of goods and services. In the production or supply, let me say supply of goods or services or form part of the administrative purposes or form part of administrative purposes. So if it is forming part of administrative purposes or due to the normal operations, normal course of business operation, that is what IES system. Because IES system, the asset is used in the production of goods and services. Do you remember that? Do you remember the IES system? The non-current assets are used in the production of goods and services. Do you remember that?
Yes, please.
Right. So that is IES system effort. So this IES system is not IES 40. Take note. And then so any property that is used to supply goods and services is not IES 40. Then property held in the ordinary course of business. Property held for sale. Property held for sale in the ordinary course of business. So which standard is this? This example, which standard can it fall under?
IS2.
IS2. Good. Who said that? Who said that?
Robert.
Robert. All right. So IS2. IS2. Property held for the sale in the ordinary course of business. Inventory looks at the property, or that is the materials or the finished goods that is for sale in the ordinary course of business. So that is IS2. So IS2 is not IS 40. IS 15 is also not IS 40. Then can we say property being constructed? Property being constructed or developed. Property being constructed or developed on behalf of a third party. On behalf of third parties. So this one too is with standard. Let me see if you are learning. Which standard is this? Property being constructed or developed on behalf of a third party. On behalf of a third party. Yes. Which standard is this? This is IFRS 15. IFRS 15. Contract from customers. Contract from customers. I'm sure I did first semester or second semester. Do you have this standard in your outline this semester or second semester rather?
It's first semester.
It's first semester.
Yeah.
Oh,
Revenue from contracts with customers.
revenue from customers, yes. Yeah. Contract from customers, right?
Yes.
And owner occupied property. Owner occupied property. So if I have a property and I'm occupying it as the owner, which standard does it fall under? Owner occupied property. IS what?
16.
Yes, IS 16. Owner occupied. I'm using my own property in my normal operations. right? And then you can also talk of property leased, property leased to another, property leased to another entity, property leased to another entity under a finance lease, under a finance lease. Go and search the meaning of finance lease and operating lease. Go and research on these two, operating and finance lease. Go and read on them and give me the feedback on operating lease and then finance lease. The difference, key difference between the two. Thank you. So this would fall under IFRS 16, IFRS 16, IFRS 16.
Okay.
All right. So that is the key stuff under the words under investment property. So now we would also look at the recognition criteria. Let us look at the recognition criteria. That is very important. And understand that what is the recognition criteria? What is the measurement criteria? Right? Recognition criteria. You remember PPE? I gave you the. So what is the recognition criteria for PPE? Yes, recognition criteria for PPE. What is the recognition criteria?
The value of an asset of the asset should be measured reliably.
The recognition criteria for PPE
is maybe there should be an economic benefit linked to the firm.
there should be what?
The future
It should be probable that future economic benefits will flow to the
will flow to the entity.
All right. So recognition criteria for investment property is it is probable. It is probable. Probable. It is probable that future economic benefits associated with the property will flow to the entity, will flow to the world, to the entity, will flow to the world entity, to the entity. The cost can be measured reliably. The cost of the property can be measured with some form of reliability, right? Can be measured reliably. And I think this is the recognition criteria for PPE as well. This is the recognition criteria for PPE. Then what is the measurement? What the standards? They will ask you what is the recognition criteria? What is the measurement? You should know this thing. What is the measurement criteria? So this one, it is initially measured at what? Initially measured at what? Initially measured at cost. Initially measured at cost. Initially measured at cost, right? In any transaction cost. And any transaction what? And any transaction cost. less accumulated depreciation. Less accumulated depreciation. Less accumulated what? Depreciation. What is the subsequent measurement? So measurement is initially measured at what? Cost. Keyword is cost. Initial measurement is at cost. Subsequent measurement is what? What is the subsequent measurement? The subsequent measurement is fair value. The fair value and or the words cost model. Fair value model or the cost model. So the initial here you measure it at the cost of the asset, and with the subsequent measurement you can decide to use the fair value method or the cost model. This fair value method is without depreciation, no depreciation. Under the investment property fair value model, there is no what? Depreciation. No what? Depreciation. Right? There is no what? Depreciation. You get it? If you don't get it, forget about it, right? So now, let us look at this transfers and what? And the investment property. Transfers and the investment property. Transfers and the investment property. So sometimes you are using the assets as your own assets, right? So you are because you are using it as your own assets and you are using it in the production of goods and services, you would initially recognize it as what? IAS system. As IAS system. Now you have decided that no. I don't want to use or I have first floor, second floor to third floor and then third floor. Now I don't want to use all the floors, right? I want to use the first two floors, first floor, second floor, and then the third floor I want to rent it, right? So initially you recognize it in your books as investment, IS system, because you were using the asset. Now you've decided I want to rent it, or let's say you're having a building and all the three floors, first, second, third, you want to rent it because you have gotten an headquarters somewhere. You have gotten a headquarters somewhere. You have built a headquarters somewhere. So you are moving from that building to your headquarters. So you are renting that premises. So this is called what? You are transferring from what? From IAS 16 to what? IAS 40. Right? So that is the transfer that we want to look at. Transferring from one standard to another standard in terms with the in relation with the investment property. So transfers to or from investment property can only be made if there is change in the use. Transfer to or from investment property can only be what? Can only be made if there is what? If there is
a change in the usage.
a change in the usage. If there is a change in the usage, right? So let's see, maybe one transfer from investment property to owner occupied to owner occupied what property. to owner-occupied property, that is IAS 16, right? So what do? If there is a transfer, so answer, what do? Use the fair value. Use the fair value at the date of the change. Use the fair value at the date of the change for subsequent accounts under IAS under IAS 16, right? So use the fair value at the date of the change for subsequent account under IAS 16. Now you are transferring from investment property to IAS. So use the fair value at that date under IAS 16. Then transfer from investment property IP to inventory. Now you want to sell the assets, right? You are now selling it. So it is like you transferring it to what? You are making it one of the inventory that you sell, right? Inventories, we sell them, right? Your finished goods, basically. So what do you do here? If you are transferring it to inventory, means you are selling it as one of your inventories, right? So use the fair value. Use the fair value at the date of the change, for subsequent accounts and what IAS 2. For subsequent account under IAS 2. Then what else? Because let's say transfer from owner occupied. Now you were using the assets. Now you want to invest it. So this is the example that I give: owner occupied to property, owner occupied property to IP, right? Investment property. So this one, it should also be carried out at the fair value, right? At the fair value, carried at the fair value. Sorry, carried at the fair value. So fair value, right? All right. Then what else? Let's see. We can also transfer from inventory to investment property. We transfer from inventory to IP. You have been selling it. Now you say you want to rent it. So if you are renting it, it should also be carried at the fair value. It should be carried at what? The fair value. At what? The fair value. At what? Fair value. At fair value. To carry at fair value. Right? At fair value. At fair value. So if there is any increase in value, that will go to the OCI. And if there is a decrease in value, that would go to P&L. Increase in value, OCI. If there is an increase in value, that will go to OCI. If there is decrease value, I'll go to P and L. Right. All right. So that is all about I AS 40. Let's see if we can solve some 1 or 2 questions and then call it an evening.
Hey. Yeah, it's almost 10.
So we should solve just 1 question, right?
No.
Just one. I think you are in the house. You didn't go anywhere. Since morning you were in the house chilling. All right, so let's look at this.
Hey,
This
can you
example.
go back a little?
Can I go back? You mean
Yeah.
scroll up or down?
Yeah, scroll up, please. The measurement criteria, they know that follows it. I missed it.
The measurement criteria.
Recognition criteria.
So then we move to transfer and the IP. Yeah, I want that one.
All right.
Can you scroll down and see?
Yes. Are you okay now? Yes, you scroll down or up?
Down small.
Small down. Is it okay?
Yeah, it's okay. Thank you.
So let's solve this short question. It's a short question. And it's just to I beg you. These two because you have a limited time now. If I don't you have to finish so that you practice on your own. A lot of stuff. Because there are a lot. You have to solve as many questions as possible. So I'm sharing this one to the platform. This one wants you read quickly. Oh, I think I have to present it here, right? So let me present it here as well. Let me present it here. So let me present it here. Right. So I believe Let me see. Okay. All right. So I believe you can see now. Can you see?
Yes, please.
Okay, so read and let's go quickly.
S&G owns the property, which it rents out to some of its employees. The property was purchased for 30 million.